Thank you for having me here. Thank you for inviting me to this meeting, Christian, the organization. I'm Lorenzo Serratosa, and I'm the CEO of Cow Markets EAFI. My company is not a fund management company, so it's a kind of weird company to be here, but I'm going to try to explain why we are here and what we do regarding investment and value investing. So, as I was saying, we are Cow Markets EAFI, an advisory company. And first thing I have to say is that all the things that I'm going to say here would have been impossible without my partner, Jose Ivan Garcia. Both we run our company, both together. We build the strategies and all the things that we are going to talk together, and we are going to talk today here. So, as Christian said, we are a factor investing. We follow the quantitative value investing, and we are a technology-driven company for advising. So we use technology for creating strategies and for selecting the companies that we are going to invest in, advising funds, of course, but also individuals, and not only in a buy and hold strategy, buying or looking for one company and keep it in your fund or in your portfolio for 5 years, but also using multiple products. So we have a lot of products today to use, and we are creating strategies to use different products like options, stocks, and a lot of things, and also different strategies. Value investing has changed, and you have the job of Greenblatt, Keyrus, and a lot of people who is creating different strategies, long, short, absolute return, a lot of new things that we like to apply and we like to work with. So those are the guys that we follow. Graham, the father of the quantitative investing. Joel Greenblatt, for us, one of the teachers, one of the main teachers of our job, the guy who has created the way of place the mathematics inside the investments. And also Keyrus, a guy that we follow a lot, running a great hedge fund and a great researcher. And we love ratios, and we love data. We are focused on this. We like this, because we believe that all the things that the company does are, and you can see them in the data, in the results of the company. So, I'm so sorry, but we don't believe in visiting the companies. We don't believe in listening to the management, because then you can fall in love with one business and don't pay attention that maybe in the other door, just close to you, there is another company that is doing the same that maybe you don't know, but has better ratios and has better performance. So we don't want to do that, and we are focused on data. This is the things that we like. And in this way, we are running two funds. One is from Valuespain. It's a fund that has a big track record and is all sector focused. And in 2016, we changed the category of this fund to an equity in Eurozone. Before he was a mixed fund, bonds and equity, and now it's only equity, Eurozone. And then this year we have created a new fund that is Formula Cow Tecnología, technology focused, equity globally, only in technology, with a new analyst that we have included in our company, that is Diego Porto, and he knows a lot about technology. And those are the performance about our funds. I'm going to talk about Valuespain only the last 3 years, because it's the last 3 years that he has been in the new category. So, 2016, we were the #1 in Morningstar category, in the new category, equity, Eurozone. 2017, we were in the top 6 in this Morningstar category, and this year we are in the top 3 of this morning stand category with these results these 3 years. In Fórmula Cow Tecnología, as I've said, we have started this year, and we have this performance, 3.86 at the end of February. And which is our investment process? So I have said what we do, quantitative value investing, but which is our investment process? I place here a quote from Graham that says the best investment decisions are based on facts, no speculation. This is what we look for, this is what we like to do, base our investment decisions on facts and try to avoid all the subjective things that are involved in the investing, all the things that can create mistakes in the decision making. So those are the guys that we like in the researching and researching and researching and learning and continually learning that we like to do. Fama and friends, one of the better researchers that American researchers that they have researched a lot about book to value and value investing. Piotrowski, a great researcher, great studier about what is happening in the market, and of course Cliff Asness and his research about value, momentum, how to blend different things, different strategies, long short. So this is what we do. We research and research. And I place here one thing that for me is very important, that the most expensive sentence in the stock markets is, this time is different. It is never different. Economy is always like this, it's always the same. You are going to find cycles. And of course, in stock markets, you are going to find bull markets and you are going to have bear markets, and this is not going to change, and we have to work with it. So our main tool for working is backtest. We do a lot of backtest with 20 years data about the markets, with more than 20,000 stocks in different markets to test how different things have performed in the market in the last 20 years, to know what is going to happen and to know what should happen in the future with different strategies and with different selecting companies. And we have created our own software to do that. Because you know, you have a problem when you want to research and when you want to make a back test, is that you don't have the tools. It's very complicated to have the tools. So we have created our own tool that is thonavalue.com. It's free for everyone, so you can go in, you can register and use this back test for free. We have created for us a long time ago, but we decided to place it in the market for free for the investors. And now it's there, free for everyone. And this is what we use to look for our investment decisions. And of course, as another pillar of our ideas, we truly believe in Occam's razor, that the simplest way is the better. In two different situations, the simplest solution is always the better. So we look for simple and profitable. If you can look for this, you are in a very good situation. And I have placed here Greenblatt, quality and price, magic formula, very, very simple, two only factors. Greenblatt, looking for quality and price, two only factors in the market, return on capital, enterprise value to EBIT, 30.8% annual returns during 16 years. Very, very simple, very, very profitable. I have placed here another example, Piotrowski. Quality to price I place. Why? Because Serratosa said, okay, book-to-market portfolios, if I build book-to-market portfolio, as Fama and Friends has done, they perform very good. They perform better than the market. But what about if I select before the companies through quality? And he created the F-score to look for quality in this bag of book-to-market companies. And doing that, he found that the portfolios perform 7% better in annual profitability during 20 years. So adding quality to a good price was a good idea. And this is two examples that the researches that we do when we want to invest. First example that I'm going to show you is a sectorial backtesting in Europe. So we are going to rank high return on capital, the companies that have the better return on capital, and low enterprise value to EBIT. And in this field, we are going to select the lowest enterprise value to EBIT. And we are going to create a 20 stock portfolios, equal weight. We are going to make an annual turnover in fiscal periods, and we are going to make a 10 years backtesting. And those are the results of this backtesting. The results are technology sector alone, annual profitability, 24.99. Financial sector alone, annual profitability, 3.8. Utility sector alone, annual profitability, minus 2.1. Nice. Example 2, different approach, another backtest. I have used here a multi-factor strategy using PEG ratio, market cap, Piotrowski, and debt to EBITDA. And I have made two different backtests. One only testing if I select companies with these ratios only in the sector, technology sector, or if I do it in whole sectors in Europe. So, only using technology sector, we have an annual profitability in backtest of 30.24 a year. But if we go to the whole sectors, we have a great profitability as well, 27.58 a year, but less than the technological sector alone. So, simple conclusions. Banks and utilities are a bad idea. This is what we believe. This is what the data is telling us. Technology is a great idea. This is what the data are telling us. That's why I'm going to talk about this company, Keyrus, a technological company in France. And I'm going to look for quality and price, because this is what matters for me, quality and price. But first, I want to talk about a little bit about technology and how technology is changing our lives today. Technology is changing everything today. Some people is calling a new revolution, you know. Here I have placed several examples. You know that there are a lot of examples. We are in a business that is being disruptive as well, financial business, funds business, by the technology. But okay, I have placed here several examples. A fridge. You know that right now, our fridge is able to make the shopping for us. So the milk is gone, and then the fridge connect with the supermarket and ask the supermarket to send you new milk, and then you receive it at home the day after. And this is right now a reality with Amazon in the United States. And I have placed here a car, how automobile sector is changing. The other day, I was in Frankfurt in the BMW factory, and we saw the new car. They were showing us the new cars, and this car was awesome. This car was able to tell you, this is an electric car, I was able to tell you which is the better hour in terms of price to be charged in your house. So maybe the car is telling you, oh, the better price for you is 3 in the morning to be charged because it's the cheapest hour. Oh, but then maybe you are at the bed and you don't want to go to charge the car. So the car was able to go alone to be charged to the charger. And the car was going alone to the charger and start charging. So those changes are here. And this is the technology that is coming. Autonomous car. You know everything. You know that if you open today the newspaper, you are gonna find people talking about this new revolution that is based on data and artificial intelligence. And here I have placed several numbers about all this change. Artificial intelligence market in 2025 is going to be 36 billion against 643.7 million in 2016. In 2020, 50 billion of electronic devices are going to be connected. And this is called Internet of Things. This is the story of the fridge. In 2013, artificial intelligence is going to make a contribution to the GDP, global GDP, in 15 billion. And all sectors are involved in this revolution. Cars, health, sales, everything. So, what Keyrus is doing in this environment? So Keyrus is a service company with these lines of business. Business intelligence, e-commerce, and 4 strategic lines where they are working. Artificial intelligence, Internet of Things, blockchain, cybersecurity. All the fashion words today in the market. And what they do? They are software implanters. They are software implanters from the big players, software developers in the world. SAP, Oracle, Microsoft, IBM, Amazon. What they do? Imagine that you have a supermarket, as we said, and then you want that the fridge of your community is connected with your supermarket and not with Amazon, because it's better for you, you are going to make sales. So you need a company like that to look for solutions, software, to implement these changes in your company. So you are going to look for Keyrus, and you are going to look for the solution of software that you need to create this new service in your company, and you are going to have them as your partner to create this new line. Or imagine that you want to decrease the prices of your logistic in your company, in your supermarket company, because you are spending a lot of time in the logistics. So you need Keyrus to do that as well. So Keyrus market, big companies, 80%, small companies, 20%, geographical distribution, 60% France, but growing a lot outside, in Latin America, buying new companies. And look, high quality, yes, this is the point, high quality. Return on capital, 17. Debt to EBIT, 1.5. Operating margin, 5%, and growing. It's a low margin, but it's growing a lot. Piotrowski, 6, very good number in F score. And also another ratios of growing. A strong organic sales growth, 40% a year. EPS growth, 24 in 5 years. No dividend paying. Warren Buffett would be very happy. And not affected by technology disruption because they are implementers, no developers. And which is the price that we are happy to pay for this company? High quality. I have placed here a quote from Graham as well. Investment is not intelligent when it's not most business-like. And what that means for me, you know, in my experience as a businessman and as an entrepreneur, I have seen a lot of business plans. And I have had one conclusion, that in an Excel, all business are good. Everything can be placed in an Excel and everything is working there. So it's just very nice for making business before you are running and working. So my conclusion, I'm totally agnostic about expectations. I only trust on data, real data. So, I'm gonna place here a conservative sector multiples right now. Enterprise value to EBIT, 30 times. PE ratio, 70 times. Price, free cash flow, 80 times. Those are several competitors, and this is the conservative sector multiples of the industry. So today, the stock of Keyrus, 7.8. Enterprise value to EBIT, 13. Fair price, Warren Buffett. Good company, fair price. I'm happy about it. Yes, I'm happy about it. But we can go forward and make some projections. Projections, 2018. The management say the EBIT is going to grow till 40.5, 40%. But if you look for another way of calculate the growing of this company outside what they are saying, you can look for Damoradan growing EBIT 11 million, 11%. I'm going to go to Damoradan very tiny. Damoradan formula, fundamental growth in EBIT, returns on capital times reinvestment rate. He has published here the reinvestment rate in this URL. 17, we were saying return on capital, the investment rate for this industry, 74.60, 11% expected growth in EBIT for this sector, so for this company, out of the manager, totally. So projections, 2018, management, expected enterprise value to EBIT, 9 times. Damoradan, if we use the formula of Damoradan, expected enterprise value to EBIT, 12 times. So great margin of safety. If we believe in the management, 30% margin of safety. If we believe in Damoradan, 7.6 margin of safety. What said Joel Greenblatt? If the margin of safety grows year by year, we are in a good business. So we have bought at 6 per share Keyrus for our portfolios. We expect in 3-5 years the stock price, because of the fashion of the industry that they are, because of the growing of this industry, and because the job that they are doing, the stock price will be 18.24, but please, don't trust on me. Don't trust in nothing that I said. I don't trust on these expectations. I just trust on data and on the things that the company is doing and the things that they are publishing when they have to publish their results. So thank you very much.